On Small Cap Power, we're joined by Frank Holmes, the CEO and Chief Investment Officer of US Global Investors, and he's here to talk about his outlook for the gold market. Frank, welcome.
Well, it's great to be with you and talk about the world of gold. And gold is the most talked about thing on Bloomberg bloggers, they were telling me yesterday.
Frank, there's something you always talk about, the 10% golden rule. What is that about?
Well, the golden rule is to be generous to other people the way you like them to be generous to you, or kind to you the way you. And I think when we take a look at the golden rule when it comes to the financial capital markets, you should have 10% in gold. That's the golden rule. That is precious. That lasts forever. And it could be on the fear trade or the love trade. It really doesn't matter. But 10% of your assets should be in gold-related investments. It can be in jewelry. 24-karat jewelry I've always advocated. And it could be in the GLD ETF, or it can be in gold stocks, or it can be in an ETF format. I've always strongly 5% each, but you rebalance each year. So the 10% rule is if you have a $100,000 portfolio, $10,000 should be in gold-related investments, and each year rebalance. So when gold outperforms, take some profits. When gold underperforms, take profits from your general equities and buy the gold stocks and bullion, because they all mean revert.
Do you think the fear trade will cool off? Because the love trade will always remain strong. It has cultural significance. But do you see the fear trade kind of tapering out?
No, I think that the fear trade is going to be with peak gold, supply side restriction. We're seeing central banks for the first time ever, like Hungary and Poland, become major buyers of bullion. When Turkey got into a problem, they had to sell gold, and immediately showed up a month later that it was Poland that bought it. No one knew. And so I think central banks are becoming a more significant player in that fear trade. And I think that investors are more sophisticated now on understanding gold as fear and love. And I think this debt unwinding is not going to go away. It's not. So gold will become that prominent asset class.
Okay. Let's also talk about your gold ETF listed on the TSX by the symbol GOGO. You specifically invest in royalty and streaming companies. Tell us why these companies are more attractive than traditional miners.
A superior business model. Superior business model. You know, number 101 at Wharton Business School. Model companies to find out who has a superior business model, and as Warren Buffett would say, barriers to entry have to be high. Is there a moat around that business? I also launched the Jets ETF. Why? Because the airlines industry has a moat around it. 2 million people a day in America fly. You know how hard it is to get a start in new airlines? Do you know how hard it is to build a new airport? All the regulatory, it's a moat. It's an easy business. People need to fly. What we did in the royalty companies is they have a moat around them. When they go buy a royalty, they don't have competition. All they have to worry about is will they find more ounces of gold and produce, and they get optionality with those royalties and streaming. So I really like that business model because they get higher returns on capital and less volatility of cash flow than a mining company. So they get to trade at a premium. Anytime a business can demonstrate less volatility of revenue and cash flow, they will enjoy a higher multiple.
You also have a fund, the Gold and Precious Metals Fund. Would you like to talk about that? Give our viewers an overview.
Well, World Precious Minerals Fund, it invests in a lot of the juniors, and it's had a challenging year. We get these wins, but overall the sector itself, because of this sort of regulatory burden of making a press release, so whatever you do, it's just so time consuming. And the major banks in Canada basically won't allow any of their brokers to be champions of junior mining deals. That was their interpretation of fiduciary. Junior technology, whatever it is, they think it's too risky for them. So if they have 80% of the assets, they have an impact on the small cap space. The independent brokers, the GMPs, they're the thought leaders. They were the first to go into blockchain. I think that that's going to be one of the big hurdles that the regulatory world has to sit down and deal with to provide liquidity and not be so expensive to provide it.
Wonderful. Thank you for your time, Frank.
Happy investing in 2019.